Hi everyone, and welcome to our latest BVNK Payments Masterclass on EMI partnerships and BVNK's customer virtual accounts. So let's get into it. First, some introductions. I'm Neus Segura, Director of Sales and Account Management for Fintech at BVNK. I have over 10 years of experience in Fintech, PSPs, and payments. And I also have with me today our Director of Product, Maxim Ivanov.
Hey everyone, Maxim here. I look after our Fiat product offering, and just like Nels, have around 10 years experience in fintech product management.
Thanks, Maxim. So let's look at the agenda for this session. I'll be kicking things by looking at the rise of fintech partnerships, how they can benefit your business, how they work from a contractual perspective, as well as important compliance and key considerations when choosing a partner. I'm then going to hand over to my colleague Maxim, who will give you a live demo of how it works with BVNK and how you can use our platform to offer virtual accounts to your customers on demand. Last but not least, we will do Q&A at the end. So please do submit your questions into the Q&A tab at any time throughout the session, and we'll answer these towards the end. Before we get into that, let's set the scene. Why are we BVNK talking about this now? Well, unless you've been hiding for the last few years, you will have seen the emergence of embedded finance. It has been a staple in consumer e-commerce, but its application in the B2B space is gaining momentum. According to Juniper Research, the embedded finance market will surpass $228 billion by 2028, growing 148%, with the B2B market really propelling that growth. Now, embedded finance is a big category. I can refer to anything from embedded lending, embedded insurance, to embedded payments. But today, of course, we're here to talk about payments. So, what's going on in here? As you can see in this slide, there has been a few partnerships that you might recognize that has been happening. Nubank with Wise, HSBC. So why are we seeing this rise of B2B embedded finance and fintechs partnering with other fintechs? Certainly, in the payment space, there are a few key factors that are contributing to this. Of course, we are all facing competitive pressure to do more for customers. Fintechs need banks to support their offerings, and as customers expect more, markets, currencies, speed, fintechs have to continuously grow and maintain that network of banking partners and ensure multiple layers of redundancy. But as most of us here know, banks haven't always stepped up. Fintechs have historically been underserved by many incumbent banks who are often unwilling to or unable to serve fintechs. These banks have often viewed fintechs as either too small or too risky, or believe they might cannibalize their own service offerings. As a result, many fintechs have chosen the partnership route, and there are just a few familiar examples here on the slide. These are typically partnerships where more specialized infrastructure EMIs like BVNK step in to support other fintechs with licensing, banking partnerships, compliance programs, and APIs. This helps to reduce cost, introduce new revenue-generating products, and improve resilience. This is sometimes called embedded or nested, depending on the exact arrangement. But this can support fintechs to innovate faster. I'm not worried about this nested and embedded namings. We're going to be looking at some of the compliance models behind this shortly. But first, what's the benefit of these partnerships? If you work with an EMI partner, it can help you to grow revenue, charging new transaction fees, and earning incremental revenue over time. Partnering can help to speed up your go-to-market and generate new revenue streams. For example, as we're going to cover later, offering virtual accounts in your own brand. Access new markets. If you're based outside of Europe, for example, you can partner with an EMI in Europe to extend European payment services to your local customers or tap into new audiences in the UK and Europe. Enhance customer experience. It's easier for your customers to stick with you as you integrate payment capabilities directly into your platform, so your customers never have to leave. You can offer money flows between customers, creating a cost-effective network effect. And last but not least, offer redundancy. Give your customers reliable payment capabilities across different industries, including for other PSPs, e-commerce, digital services, gaming, forex, etc. But of course, it's important to be wary of potential pitfalls. Even if an EMI has the right license, it can be challenging to ensure the right compliance setup to meet ongoing obligations around safeguarding. Some jurisdictions have tightened up regulatory requirements and scrutiny around licensing, and EMIs that haven't kept pace with this have had their licenses revoked. It's no secret that in recent years, the number of enforcement actions by banking regulators has grown exponentially for banking-as-a-service providers and fintech partner banks. And regulators in jurisdictions like Lithuania, that were once considered easier and so have been magnet for fintech seeking EMI licenses, have tightened up their scrutiny of EMIs, leading to various enforcement actions that we've all seen in the news. Bottom line here would be it's key to choose a trusted partner with robust compliance credentials. So, what should you consider when choosing an EMI partner? And why would you choose BVNK specifically? I want to touch on a few of these before moving on to look at underlying compliance models. So, your partner's compliance controls are incredibly important. Do they hold licenses in jurisdictions with reputable regulators? Have they invested in resources, risk, and compliance, and is it adequately represented on their leadership team? Their onboarding process is always a good signal of how thorough they are. And of course, looking into their safeguarding arrangements is key. BVNK holds multiple licenses and regulatory permissions to enable us to offer payment services to our customers, including EMI licenses in the UK and Malta, and a crypto asset license in Spain. Thanks to this, BVNK enables access to both fiat currencies and digital currencies like stablecoins. This kind of wide product suite can be really useful, enabling you to stay financially flexible, use faster stablecoin payment rails when needed, and when better manage your liquidity. But before we continue, I want to touch on banking partnerships. I think that's very important. That is to ensure you can reliably service your customers with scalable payment capabilities across different verticals, from e-commerce PSPs, digital forex, iGaming. You need to ensure your partner has top-tier banking partnerships with multiple layers of redundancy. BVNK has built a deep bank partner network with more than 10 top-tier banking partners, including Barclays, Deutsche Bank, BBVA, and Santander. This ensures a reliable service and coverage for your customers in industries like iGaming and Forex. Okay, so as promised you before, I want to dig a bit deeper and look at how exactly these fintech partnerships can work from a compliance and contractual perspective. I'm going to cover the three most common models: direct, nested, and embedded. So option one, direct. It can be as simple as a direct partnership. Here, you as a fintech are using an EMI partner to support you with payment capabilities to supporting running of your own business. There is no underlying customer. You are the customer of the EMI, and of course, you'll be onboarded with them with the usual customer due diligence under contract. Option two, the nested model. And this is actually what BVNK is offering, and my colleague Maxim are going to show you shortly on the demo. So what does this mean from a contractual and compliance perspective? This is when a regulated fintech in the middle of this diagram contracts with an EMI partner like BVNK to offer onward payment services to their own customer. The fintech has the contractual relationship with the customer and does the onboarding. The reason that the end customer does not need to be KYC'd or KYB'd by the EMI is that the PSP or financial institution has the right license to be able to provide these financial services themselves. From a compliance perspective, we call this a reliance model, because the EMI, in this example, is relying on the customer due diligence and onboarding that their fintech customer carries out with their customers. This is typically a completely white label experience, so the fintech or PSP in the middle is totally in control of the customer experience. Option 3, embedded. This is typically the most involved relationship of the three I'm showing here today. The fintech or PSP in the middle might not have the exact right license to offer the payment service, so it's relying on the license of the EMI. In this case, the fintech is a technical orchestrator of payment services, and the EMI has a direct relationship with the underlying customer or end user. And they are also responsible for carrying out KYB and KYC checks on those underlying customers. Because of that, the end customer would need to enter into a contract with the EMI, as well as its main provider, the PSP or fintech in the middle. So to sum up, you might want to use this model if you don't have the right license to offer everything you want to. So, okay, that's it from me. Now we're gonna look at the product and see how this works and what it looks like if you're partnering with BVNK. So over to you, Maxim.
Thanks, Neus. All right, before we jump into the demo, let's spend a little bit of time talking about like the fundamentals of the product that we have built not so long ago. So customer virtual accounts operates under the nested model that Neus explained a couple of minutes ago. What it means that we have a direct relationship with you as a financial institution, and you have direct relationship with your customers. We don't engage any direct with your customers. Apparently, that's why it's called nested model. So who can use this product? Regulated financial institutions, EMIs, banks, payment institutions, and maybe some other licensed institutions as well. There are like many financial institution licenses in different countries. It's important that at the moment, this product works in UK, in Latin American region, in Asian Pacific region, in Middle East and Africa. So we so far didn't onboard FIs from EA and US, although both EA and US are very much work in progress and will be built at some point of time. So what type of payments can be made? We have Euro and GBP capabilities, which work with local banking payment rails. So for Euro, it's SEPA Credit and SEPA Instant. For GBP, it's faster payments and CHAPS. What type of customers or underlying customers, your customers, can use this product, or for what type of customers can we create the virtual accounts? These are individual customers as well as business customers. Yeah, so here we have pretty wide coverage. So how can the product be accessed? We support two channels. One is our portal, and I'm going to demonstrate it to you in a second. And the second one is the API interface. So effectively, there is a nearly 100% feature parity between what you can do in portal and what you can do by the APIs. But obviously, APIs allow you to operate on scale and allow you to build full automation on your end. Let's get to the next slide. Before we jump into the demo, let's talk about like high-level use cases that we cover. But the reality is that there are a lot of different use cases, ways this product can be utilized. But we see the most momentum in those three. First of all, neobanks. So these are the neobanks who want to provide their individual customers, but not only, also business customers, with named virtual accounts for Euro and GBP. So the customers can do Euro and GBP payments and also hold funds in these currencies. The second use case is about PSPs. That's pretty typical. PSPs normally want to issue named virtual accounts for their business customers, effectively for their merchants, in order for merchants to settle funds to these customers, for merchants to withdraw funds from this virtual accounts. And also these Vibance virtual accounts can be used as payment instruments. For example, they can be used to originate B2C payouts to the individual customers and also to perform C2B collections from the individual customers. These are also quite common use cases, and we have a lot of PSPs who are interested in that. And the third use case is as asset and treasury managers. This, again, asset treasury management companies who are interested in, who are like moving funds on behalf of their customers and also need to hold funds on behalf of their customers. And they serve companies, and very frequently they also serve high net worth individuals. Right. I think it was enough theory. Let's take a look at the product itself. I hope everyone can see my screen well enough. So what we see here is the BVNK portal. That's the interface that is used by our customers, and that's an interface in which one can perform multiple different actions in relation to management of fiat and crypto. So let's start from the fundamentals. Here we have the first tab, which is called wallets. And wallets has two sections, fiat and crypto. So it means that one can have fiat wallets, which are linked to virtual accounts. Here we have your virtual account wallet with virtual account created and GBP wallet with virtual account linked to it. Here one can see that this shield means that these are electronic money and the funds are actually safeguarded. As Neus said, we're using tier 1 banks to safeguard funds. So it's like very secure to keep funds with us. So yeah, we can take a look at different actions that can be performed here. So one can see that this wallet is linked to virtual account in euro. So this is the BVN, and similar for this GBP wallet, which is linked to the virtual account. Account number is visible here. So one can perform deposits, first party and third party. Third party means that these are counterparties, your counterparties that can send funds to these virtual accounts, and payouts to first party accounts to just other accounts that a certain entity holds, and also to the counterparties of this entity. Pretty standard, and it works also for businesses and for individuals. Let's go to the crypto tab. That's where financial institutions and other customers of ours can hold and manage their crypto. So we have already 4 wallets created here. It's very easy to create an additional crypto wallet. Let's go for it. Let's for example select USDT asset Tether, and let's give it a name. It's a third wallet. Wallet is being created. Takes a bit of time. Yeah. So here we have third wallet in USDT, and we can get into it. And that's where we can see the wallet address. Yeah, wallet details here. So we can top up this wallet using multiple different blockchains. All right, that was a high-level overview of the primary fiat and crypto virtual accounts. And these are fiat virtual accounts and crypto wallets. These are virtual accounts and wallets that can be used by you as a financial institution. But what about your customers? So once we identify that you're eligible for a nested or customer virtual accounts product, we'll enable this My Customers tab for you. So this account is already has this tab enabled. So what we can see here's a list of customers. We already discussed that we don't want to onboard and don't need to onboard your customers. We fully trust and leverage your financial institution licenses. But we also want to ensure that business processes on your end are set up effectively, and also that we're not processing any transactions for anyone who is sanctioned. So that's why we spinned off the customer entity on our end. Yeah. So underlying customer entity. And here we have a list of your customers. Let's see how the customer can be created. It's very easy. You can just press the Create Customer button. We'll request you to add some very high-level information about the customer, business name, industry in which customer operates. Here you have a long list of industries, business description, business registration number, tax residency country, monthly volume, then address, and then the name of the representative and just high-level data on the representative. After the customer creation is requested, we start effectively screening the customer against the sanction list, and then it will appear in this under review, with this under review status. The reality is that normally it takes us around 1 minute to screen the customer and to ensure that everything is all right there. And then the customer transitions into the normal state and looks like it is displayed here. If it happens that customer is outside of our risk appetite or customer is sanctioned, then it's going to show up in not supported state. So let's get into the customer now. So we can just click on it. And then we'll see here details on the company, on the customer. Yeah, so name, registration number, tax residency, and so on. And then we see here 2 wallets that are already created. I can create an additional wallet and the wallet will be automatically linked to the virtual account. Yeah. So let's say I want to create Euro wallet and call it additional demo wallet. So now it's being created. I have requested it. Very simple step. No additional data is requested. We already have all necessary data on the customer. It will appear in this inactive state again for literally a minute or two. What is happening in the backstage here is that we're again screening the customer against sanction list, because there can be time jump between different screening events. The customer could be created months ago, and now we're creating another account for them, and we want to ensure that they were not sanctioned in between. And once there is success, we will issue them a virtual account. In case of Euro, it's going to be IBAN account in IBAN format. All right, let's take a look at the actions that we can perform with this virtual accounts. So we have here, we can take a look at the customer virtual account. It's here. Yeah. So one can use this virtual account to expose it to their counterparties and to collect funds from them, or to perform C2B collections. Then it's possible to make payouts from this virtual account. Let's select a beneficiary. We have a beneficiary already pre-created here, but effectively it can be any account that supports domestic GBP rails, faster payments, and CHAPS. Then we can pay. Let's select some small amount, like 10 GBP, for example. Here you'll see also transaction fee. Well, for this account, apparently it's set up to 0. And the next step is that we need to go through the two-factor authentication. Let me get the one-time password here. Okay. And it's a success. So payment is submitted to the network. So what we've done right now is that we performed the third-party payment to some third-party beneficiary from the virtual account that is issued under the name of your customer. As you have noticed, each of the wallets has a separate balances. So this is for a reason. So we think that this is more convenient from the liquidity management perspective. With that setup, you can leverage our ledger system, but it also means that there should be capability to move liquidity between the wallets of different customers, and also between the wallets of the customers and the primary wallets of the financial institution. So that's exactly what I want to demonstrate to you now. We took this wallet. Then we can select if we want to move funds to either another wallet that belongs to the financial institution or to another customer wallet. Let's select just another wallet. So that's one of the main primary wallets of the financial institution. And let's transfer, let's say 100 GBP. So continue. There is no two-factor authentication step here, simply because funds are not losing the account. Funds still sit within one financial institution account. They just move between different wallets. So two-factor authentication is not enabled here. So we press continue, and then it's a success. We can close this window. Let's go to the primary wallet. Let's take a look at GBP. I think the balance has already changed. The transaction hit the account. I think the great thing about the BVNK platform is that we have fiat capabilities, and also we have crypto capabilities. And what we can do is that upon receival of this transfer from the customer wallet, we can convert funds into crypto. So let's take this wallet. Let's select the crypto wallet that was created previously, so this third wallet. And then let's select the amount, let's say 100 T. We request a quote here. So yeah, if we agree with the rate, we can press convert now. And it's a success. The conversion has happened. Let's take a look at the crypto wallet. Third wallet, yeah, now it has 100 USDT. Here is a transaction that just took place, conversion from GBP to USDT, and it has a complete state. We can take these funds, from the third wallet. And we can send it to some crypto address. Yeah, this one. We need to select the blockchain, the protocol. Let's say we want to send 90, and then we just continue. And of course, just like in case of fiat, we have here two-factor authentication. And it's a success. So the funds have been sent through blockchain. And now it's in the processing state. It takes normally some seconds, and in some exceptional cases, minutes to process funds through the blockchain. All right, what we have seen today is that, let's just wrap it up. We have here wallets, fiat and crypto, that belong to the financial institution. We have customer section, where financial institution can create customers and create underlying customer wallets for them. Then we can do fiat pay-ins and fiat payouts from these wallets. And then we can move funds between different wallets, and we can convert funds between fiat and crypto wallets in any direction, and it works for all type of assets that exist on our platform. I mean, all that opens a lot of opportunities for very different like scenarios and products that can be built on top of BVNK platform. And all that works consistently via our portal, via our APIs. I think that's it. Thanks everyone for watching it. And I think let's get back to Neus, who will moderate our Q&A section.